prices in the Seattle metro area up 11% in the last year. That is twice the national rate, according to the latest S&P Case-Shiller report. The Wall Street Journal also reporting the city is on track to become the next San Francisco. Joining me right now is PwC Real Estate Trends author Mitch Roschelle. Good to see you, Mitch.
Thanks, Maria.
You're looking at real estate trends across the country, but I want to ask first about Seattle. Why is Seattle so hot, and is that sustainable?
Good question. I think it may not be sustainable. It's really a one industry town. There's a lot of concentration risk there from an industry perspective. So the sustainability is a concern. Seattle is a little bit different from San Francisco, which has got more diversity. So I worry about headwinds in that industry causing a problem. So
prices are going up, and the supply is what? Do you have more demand and less supply in Seattle? Is that one of the... A
lot of demand because kids are graduating from college. They can find jobs there, and they go where they can find jobs. So that's the demand side. The supply, a lot of new construction, and it's expensive to build now. So we're building stuff that's really not affordable for the kids.
I see. How does Seattle compare to the rest of the country?
Seattle's pricey. So twice the supply challenge that you have in the rest of the country. What's really, really interesting is the median house price in this country is still $231. So when Seattle's at $4 something, but New York, we were talking about before, $1.2 million. So the rest of it's really a challenge if you want to be a first-time home buyer to find products.
So let's talk about New York for a second. You're saying average 1.2.
1.2 is the average.
High end.
High end. Well, that's 5 boroughs, so you got to figure Manhattan's driving up the average.
Gotcha. Okay, so is there a lot of supply right now in New York?
The high-end supply is really sort of overdeveloped. The low-end supply is not available. So if you're living in Westchester, where I live, Fairfield County, and you're a first-time home buyer and you want to find a home, you really can't find one. There's very little supply, 4 or 5 months of supply in the market. It's not enough. And what happens in this day of app buying, as soon as the house shows up on the app, people run to it. They're actually bidding above asking price.
So that tells me that they're getting their price. It's a seller's market.
Absolutely, Maria, seller's market. Sellers getting the price, but buyers being squeezed out because they can't find the house that they want.
So would you recommend to people to wait before buying a house right now?
In a period of rising prices, it's never a good idea to wait because you may wait too long and be kicking yourself.
You don't have to time the market.
No, I'm a real estate guy. I've never timed the market.
So even when you say, okay, look, prices are up, it could be a little frothy, you still don't want to time the market.
You don't want to time the market. What you need to do, I guess I would say there's 3 A's to the housing market. There's affordability, there's availability, and then there's appraisal, which I'll come to if we have time. But availability is a real challenge because if there's no product on the market and you need to buy a house, you're going to end up bidding up for that house to find it. And what's interesting, what's happening on the appraisal side of things is people are paying above asking price, which means when the bank does the appraisal, it may actually come in lower, which means you may find yourself not getting the financing you want.
Isn't it really hard to get the financing? I mean, getting a mortgage right now has become real difficult.
It's real underwriting standards, and they go down to the appraisal. So it used to be that they would take transactions that haven't even closed yet and bake them into the appraisal. They're not even doing that anymore. So right now, you actually have to look at closed transactions. So if you're bidding up above asking price, you're not going to get the financing that you want.
So when you see the economy where it is right now, real quick, we got a 0.5% GDP report out today. Are you poised to believe that this market's about to soften?
I don't know. As it relates to housing, we're still forming households ahead of the amount of new supply that we're creating. So real estate's fine. Real estate's also driven by jobs, and we're creating jobs. So I don't think the real estate market is that tied to GDP. It's more tied to the job market.
Okay. We'll leave it at that. Mitch, great advice as always. Thank you so much.
Thanks, Maria.
Mitch Roschelle.